Okay, welcome everyone. We'll start our lesson one. Today lesson will go through our LO1. As you know me, my name is Anjum Satha. Please, if you have any question, drop me email and we'll go through in just 2 minutes. Hope so everyone will join us. And during our delivery of this subject, please, if you have any question, drop me email anjum@ukuniversity.co.uk and I'll try my best to get back to you as soon as possible. So let's please we'll start. Okay, before starting, first of all, we'll discuss about the unit content, what we're supposed to learn next, few lessons, few weeks. Okay. Okay, welcome everyone. We'll start our lesson one. Today lesson will, before starting, we'll go through the unit specification. As you know me, my name is Anjum Satha. If you have any question, drop me email anjum@ukuniversity.co.uk and I'll try my best to get back to you as soon as possible. So this lesson will go through our LO1 learning outcome one, which is understand the concept of assurance, define the term of assurance. We describe the concept of positive and negative assurance. Absolute, need to never give the absolute assurance. Always remember, explain the assurance process, compare, contrast the responsibility of different stakeholders. So it's a merit criteria, analyze and the possible purpose and the outcome obtained from different insurance engagement, and we'll go through the assess the needs, plan assurance activities with the professional skepticism. Then we'll go through LO2 in the lesson 2, 2.1, 2.2, 3, and 4. And lesson 3 we'll go through LO3, lesson 4, LO4, and the key indicative content, which we'll go through define the concept of assurance, and we'll discuss about internal, external, and all the assurance engagement. Okay, so each lesson will go through these indicative content, each learning outcome, each lesson will cover one learning outcome. Okay, let's please we'll start. Okay, guys, so all the required resources available here. Please you can find, all the required resources here, the books, journal, article, research paper, and today is our key, which will go through our LO learning outcome. Okay, let's please. Okay, our LO1 is about concept of assurance, and we'll discuss about assurance engagement. That's the key, in our lesson today. And if you have, okay, always financial statement need to be prepared true and fair. So true and fair is matched with the reality. What we are saying, physically we own the asset and we have the physical. That's anything like whatever we say, it's have the materiality because the material figures all will be included, and the idea is to give the assurance. So the aim of this unit provide the learner with understanding the concept of the assurance really, and understand different stakeholders, completing assurance engagement, understand internal control, and it's important in assurance as well as the practical understanding how they gather required evidence. Okay, so please, that's always good to be reflect how much we know about assurance. Scale 1 to 10. Okay, at the end, carry on reflecting. Okay, let's move to the next. Okay, definition of concept of assurance. We'll go through the user of assurance report, both internal and external. We'll go through assurance principle. We'll go through the assurance techniques. We'll go through the assurance process, including engagement of acquisitions. We'll go through the risk assessment, and we'll we'll discuss about acceptance, scope, planning, completion, evidence, conclusions, and reports. record keeping is very, very important. So we'll go through the definition about assurance. Assurance engagement with the practitioner, which is accountant, express the conclusion designed to enhance the degree of the confidence of intended user, other responsible parties about the outcome of the evaluation of the measurement of the subject matter against the criteria. That is quite crucial. So practitioner can be editors, intended user can be shareholders, responsible parties, the managers, and subject matter is the opinion about the financial statement. Criteria following the accounting standards and the legal requirement, and reasonable insurance is a high level of assurance, but auditors never give absolute insurance, which is mean 100%. We give the reasonable assurance based on evidence which we collected. Are we getting from the company? On the basis of this, we can look around the okay. Limited assurance is the low level of assurance, then the reasonable assurance, which is stated negatively. An auditor can never give the absolute assurance because inherent limitation of the audit can be subject to the judgment by the director. Director may not give the information to the auditors, and possible the fraud has been concealed, and the sampling evidence is the persuasive, not conclusive. That can be the reason, Okay, assurance engagement in which the practitioner express the conclusion of the design to enhance the degree of the confidence intended users and the responsible parties. We can look around these, again the criteria. We have an international audit and assurance standard board. We the guidance will carry on following in the simple term. Give the assurance mean offering an opinion about. The word audit is derived from the Greek word adera, which means check the accuracy in the book of accounts. That's really we need to be look around. So make confidential decisions, knowing the risk. Risk is mean the probability and the chance of happening incorrectly, reduce. So we have to look around. The assurance should be reasonable assurance, statutory audit, which is by law you have to do, free from the material misstatement, and true and fair. And limited assurance, of course, is negative assurance can be, and review engagement. Okay. Elements of insurance, the 5 elements. The practitioner review the information, intended user of the information, and responsible party prepare the information and the matter under scrutiny, and the subject criteria. Again, the judge, the reliable IFRS, which is International Financial Reporting Standard, and sufficient appropriate evidence, substantive and opinion which we can, and written the reports is appropriate form. So that's which we can, it's help to reduce the risk, increase the confidence. Let's look the example of assurance fee. Consider someone who is buying a house. The most of the public, the lack of the technical expertise of the assess the structural properties, and there is a risk someone pays some of money, purchase a structure unsafe property, and which is need to be further expensive expenditures to make it seizable, usable, or savable. And to reduce the risk, there's normally a house buyer pay a party surveyor to perform structural assessment, and the house the matters the surveyor would be report back to, and the house buyer identifying any structural deficiency measured against the suitable structural criteria, which information potential buyer can make the decision to buy or not buy with the confidence that the knowing the structural condition of the house. So user of the assurance report, both internal and external. So assurance report is a tangible output of the assurance engagement. The report may be internally used or externally used, and this is so audit can be internal audit or external audit. Yes, external audit really is a compulsory audit. Mostly is if you have people 250, a third party or SRA, regulatory authorities, we need to do audit. So confidence that it is credible based on the evidence obtained during the engagement. Practitioner and conclude whether the assurance is objective, and that mean met. The objective would be either the positive, negative assurance, conclusive, issued according to the type of assurance and reason, and the limited assurance as agreed, and the start of the engagement. The title of the assurance report delivered in accordance with the applicable assurance standard include the term assurance, and distinguishes it from the reporting of the non-assurance engagement. An instant, agreed upon the procedures engagement and such as non-assurance engagement and maybe refer to the clients, other user and the assurance. The assurance report draw attention to the addresses. Okay. 1.2 describe the concept of the assurance engagement and type of assurance. International Audit Assurance Standard Board internationally framework of the assurance engagement perform two types of assurance: reasonable and limited. The resources assurance engagement. In the reasonable assurance engagement, the practitioner gather the sufficient appropriate evidence to able to draw the reasonable conclusion and concluded that the subject matters conform in all the material respect with the identify the suitable criteria and give positively awarded assurance opinion. Limited assurance, and some users incorrectly believe that the audit does not provide the absolute assurance and the opinion and the guarantee of the financial statement. We need to be look around. Misconception, expectation gaps can be, so we have to look around these and believe that the edit is 100% transaction and the balancing test, the simple basis. Yes, that's, which we can edit is responsible preparing the financial statement. That's the reasonable management, and the limited assurance is uh, assignment that the practitioner gathered the sufficient evidence and able to draw the limited conclusion. And then the conclusion is subject to the matter repeat identify the subject criteria of the circumstances and the negative. That's really we need to be look around. So what we said earlier, please, we need to be look around the review engagement, voluntary. These are we included some examples. So example of the assurance engagement is the review engagement is a possible small company who are not legally required to have full audit or review for their financial statement, enable them to present their account to the potential lender. Yes, there is a no precise definition what is meant by reason are the limited in this context. However, the clearly confidence inspired that the reasonable assurance report designed to the greater that inspired, by limited use. So that's, which we can, that's the example. We can look around the standard objective of the financial statement. We can look around the international accounting standard board or review engagement. Uh, and characteristic of the review engagement, those we need to be review engagement voluntary analytical procedures and make required negative assurance. Yes, if we have, so reasonable assurance, we said the assurance is the high levels. Yes, regarding the potential reasonable assurance include understanding there is a remote likelihood material misstatement achieve, reasonable assurance. Data need to obtain the sufficient appropriate, audit evidence. This means, there is a no uncertainties arising from the use of sampling when concluding really an audit financial statement. A high level of objective really we need to be with the fair representation and in a reasonable assurance practitioner sufficient appropriate evidence all material aspect positive worded assurance illustrate, positive worded assurance opinion. In our opinion, the financial statement fairly all the material respected give true and fair information about of ABC as year end and the financial performance and cash flow of the year ended according with the internet. So that type of assurances should be fine. So 1.3, which we can look around the three parties involved in the assurance, the purpose of the management, the user shareholders, and the practitioner, which is the detail. The management, the practitioner subject matters really they want to be and they want to decide, which financial statement preparing true and fair and filing the financial reporting framework and finally prepare the written reports, which is present the shareholders fair, present, true and fair in the presentation. So that's really we need to be look around 1.3. We can look around the development of insurance engagement, incorporation, separation of ownership. There is no conflict of interest as well. Business can be operate, through the number of different, vehicle and the commonly investors. We can look around the financial shareholder. These are all the user and incorporation. Actually, editors are the agent of behalf of the management, and they want to be should be. So shareholder actually the owner of the business. The preparing the protection of the shareholders and leads to the significant conflict. Shareholders see the maximum of the wealth, increasing the value of. So nowadays, the concept is the stakeholder. Um, Value maximization, not just only the shareholder, the steward who look after on the behalf of the shareholders, and the financial statement and account and directed is the steward of the shareholder, especially in the public limited company. Okay, the financial statement and the benefit of the reporting higher profit and therefore need to be independent review and assurance is particular audit. Stewardship, which we mentioned, steward is the responsible to take care about the resources. The steward is the person interested in the management and other parties, like we discuss about fiduciary relationship, because someone else known as they have a duty of care. The steward is the accountable for the way they carry out the role. Fiduciary is the relationship, good faith, such as that between the director of the company and the shareholders, and there is a separation of the ownership and the control of the company, and director take the decision. Director must be take the decision in the interest of the shareholders and not only own interest. Accountability meaning the people who the position are used not power, they use power not correctly, then of course they can be punishable. And accountability, the central concept of the corporate governance, how the company run and uh, manage, like the Barclay Bank's CEO a few years back, being paid £2 million bonus when Barclay Bank not earned a single penny. It's just agency, the agent and principal relationship. That's which we mentioned earlier. Okay, so audit engagement, which we said, external audit, which is quite, statutory audit, and we need to be, especially public limited company, to prepare the objective of the audit to give the true and fair information. As we said earlier, that we need to be follow international federation. We need to look around the ethical standard, international accounting standard board, and professional skepticism. Recognize, the financial statement being audited may be materially misstated. So we have to look around. We compare and contrast the responsibility. The stakeholders is anyone who has any interest in the business. It can be shareholders, customer, employees, lenders, communities. Stakeholders involved in assurance engagement and need to be provide them information that should be true and fair. Internal stakeholders, those are within the company. External stakeholders, we look KPI, key performance indicators, other factors such as the concern based on the experience at other companies. We need to look around the concise, high information. We have to look around, various and the committees and the corporate governance and control, the executive management. The primary need to be audit the area of the concern, look around the possible cost and benefit and perceive, and the other factors which we internal audit the project, which we can look around advisory work, concise information through may want to be detailed. These are the key points. Lead management, line management, really we need to be look around, the possible primary needs, a clean audit as a few finding, programmatic action, improve the control of environment, rating the reports, number of recommendations of internal audit in their department, and other factors may want internal audit to increase with the executive to the behalf and want to use free resource by borrowing internal auditors to work with them. Okay, so in the external auditor, those are outside stakeholders. An external audit is very, very important because internal can be biased. Maybe people shouldn't be moving around and checking their own work, and we need to be look around the conflict of interest, the uh, review threats, and however the professional effective team, which we need to look around the regulators really, and all the regulation bodies there, the compliance side, like international reporting standard, internal reporting standard, corporate governance standard. And then please, if you want to work towards merit, the objective of assurance is obtain the sufficient appropriate, and extracts conclusion and limited assurance, and whether audited body has been compiled the requirement appropriate insurance. We can look around assurance engagement, reasonable assurance, statutory audit, free from the material misstatement, true and fair, limited assurance, and review engagement. So review engagement, the objective of the review financial statement enable details to the store whether the basis of the procedures and don't provide all the evidence required in an audit. Anything come to the details attention that cause details to be believed. The financial statement are not prepared according with the applicable framework which we can, and the characteristic and the insurance engagement. We need to be look around in the analytical review inquiry secretary audit, which is required by the law. The company must do audited all, and look around accounting standards, and the financial statement include the objective and the judgment matters and inherent in limitation, control, use or detailed evidence, representation from the management. Evidence is persuasive, not conclusive, and don't review 100% the transaction. There can be expectation gap. The financial statement include the subjective judgment inherent to this presentation. Evidence, may be often persuasive. So these are, please, when we add these examples, so we are meeting the merit criteria. Distension accept the plan, so we can look around the international accounting standard. We can add the example of the financial reporting council, if their views about professionally skepticism, Anita's mindset, and consider the reason for approaching audit with attitude of the professional skepticism increasing, important. What is the professional? We can look around an attitude include the questioning mind, alert, the condition which may include the possible misstatement due to the error or the fraud or the critical assessment. So IS 200 overall the objective of the internal audit and the conduct audit according with the international standard. Auditing contain more guidance which we can. ISA 200 which is contain the specific requirement relation to the professional skepticism. Auditors may plan and perform the audit with the professional skepticism regarding circumstances that exist. Okay, application of the paragraph of international 200 content is a more guidance. What is meant by applying the professional skepticism when conducting audit. The professional skepticism includes being allowed to example audit evidence that be contradict with the audit evidence obtained and information that bring to the question the reliability document. That's the problem. Condition that may be indicates possible fraud and the circumstances. Audit procedures addition. IS 280. Okay, 200 is required to use skepticism mean enhance the editor's ability to identify the risk of the material misstatement. Professional skepticism is closely related. Ethical consideration, yes, use the judgment and how the editor's professional skepticism editor likely to apply the professional skepticism on the various stage of the audit. That's and it helps to reduce the risk and identify the risk and draw the true and fair. So please, it's a quite lengthy slide. These we included for the sake of you can pick the points, to address, and you can embed the standard in your discussion to meet the assessment criteria, like we discussed, the international standard of assurance 240 that can be included. We can look around other aspect of the audit where the professional skepticism may be important, very, very important, especially in the loans and other companies asset. Those are hosts where asset register can be used, the financial reporting, and we included a lot of reference here. Please, the sources, when you click those and you can read, further, and that's, backup slides you've been given some of, the money laundering and public audit, bad debts reports, and ethics. Those we need to be look around 5 professional code of ethics, which we'll go through in the next lesson as well. And those are backup slide, please, is good to go through. If anyone, any question, please. So in our next lesson, we'll go through today, we discuss about positive, negative assurance. We discuss professional skepticism, and we discuss, internal and external audit. And that's all was in our discussion. In the next lesson, we look LO2. Thanks for attending, and hope those are listening. I will speak to you during our next lesson. Have a lovely weekend. Thank you. Bye-bye. Bye-bye.